Hello and welcome to this exciting video on trading strategy. In this video we will discuss a powerful strategy that you can use to become a more informed trader and investor in the stock market. We will cover everything from the indicators and settings being used to implementing a solid entry and exit strategy. But before we dive in, I want to encourage you to watch this video until the end. You won't want to miss any of the crucial insights and tips we will be sharing, as this strategy uses free and widely available indicators so you can follow along while you do. And if you find this content valuable, please consider hitting the like button and subscribing to our channel to stay updated on our latest trading strategies. Also, we'd love to hear from you in the comments section. Let us know your thoughts, questions, or even your own experience with the strategy and backtesting. So, without further ado, let's get started taking your trading game to the next level. Alright, let's get started on the median commodity channel indicator strategy. So as the name indicates, it uses two free indicators, the median indicator and the commodity channel index indicator. The settings for the median indicator, and we're going to change the median length to 10, and we're going to change the average true length to 100, and we're going to keep the average true length multiplier at 1. Well, actually I think we brought that down from 2 at the original outset. And the settings for the commodity channel index are going to be set to a length of 33 with a smoothing of 5 on the simple moving average. This is going to give us a set of indicators that work pretty well in tandem. You can see when trend is going up, the commodity channel index does a good job of showing that by trading above the midline. And when it extends above previous highs, the commodity channel index pushes above that upper bound. And the same thing on the low side. Zoom in right here and see it's trading a trend. This trend is broken and then pushes down past this prior low here. It pushes down to the bottom of the commodity channel index. So we can use that to trade trend and reciprocations in a way that we have in a lot of other indicators on this channel. So we could say that when this is to start a trend, this needs to first break out of the top here on the commodity channel index. And we can see that with it moving above the median. So we could take a long here. And we could do it on the big bar just for the heck of it. Then we're going to bring our stop down to the purple area there. It doesn't have to be exact. I give it a little bit of room because sometimes it tags it like there. I mean, it's just the last average true range. So I give it a little bit of space beyond that purple area. It don't have to be exact. I don't really have an exact measurement for that. I just use like a couple of ticks beyond it. Then we're going to look for 2-to-1 restored ratio, and that's the entry and exit example for the trade on the long side. So let's look at a short. This one looks like it might not have worked, but let's take a look at it anyway. So take a short position as it breaks down below there, and take that short, or move it to the top of the green right there. And no, we definitely didn't get it. So you would have gotten stopped out when it broke back above here, but then that was your entry for the long that we showed you earlier. So let's look for a short example. It's a pretty good short example here. See, it breaks the bottom there. Probably take it to the top of that green band. You look for 2-to-1 risk to reward ratio, and you get it there. Let's look at this another long example here. It crosses above there, and by that, put your stop down the purple area. You look for a 2-to-1 risk to reward ratio, and you get it there. You can probably modify this by adding a longer term trend rate to give you a better idea of overall trend in the marketplace, as well as perhaps you could add another median indicator or Bollinger Band at 2 standard deviations to give you better stop placement if you don't like to get stopped out as much. Getting your stops tighter is ultimately what you want to do, even if you end up getting a lot of smaller losses, as long as you're able to get some nice big trades, right? Another way to run this is to just try to hold it as long as you can. So once it breaks up here on the commodity channel index and indicating a trend is starting, try to hot potato it and hold it as long as you can in that trend until you see it start to break below the commodity channel index, indicating it's ending this longer term trend. But that's probably easier to do with other indicators than these, but you can do that with this strategy. Anyways, let me know what you guys think about this one, and hope to catch you later. To wrap things up, we hope you found the information helpful and insightful. If you have any questions or feedback, please leave them in the comments section below. And if you enjoyed this video and want to see more like it, please consider liking and subscribing to the channel. By doing so, you'll stay updated on our latest trading strategies and tips, helping you become a more successful trader and investor. Remember, trading is a constant learning process, and we're here to help you every step of the way. So thanks again, and we'll see you in the next video.